Good morning from Chicago traders. It's 8:01 a.m. Chicago time on Thursday, the 16th of February, 2023. This episode is number 2412. Derivatives trading is not suitable. Excuse me one second. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Please let me know if my mic is hot. We're going to dive into the usual here in following our routine, the convergent trading pre-market summary sheet. This morning, the market was actually mild risk off, almost mixed this morning before the PPI came out, and I'll run through some numbers here. PPI was not looking good. US PPI ex food and energy month on month came in at 0.6, 0.5 versus 0.3, year on year 4.5. And then final demand came in at 6% versus 5.4%. PPI, producer price index, came in a lot higher than expected. The prior is year on year, month on month was negative 0.5. The revision's negative 0.2. So final demand month on month 0.7 versus the expected 0.4. So this is what we're seeing, a reaction in the treasuries, a reaction in equities as well. The S&P has fallen about 40 points or so, I think, from the SOC. And so we're relatively decent risk off now. The S&P down 113 basis points. That product finished pretty bullish. Across the board, actually, the NASDAQ, the Dow finished pretty bullish yesterday. The NASDAQ off 286 points. NASDAQ off 180 points, and the Russell off 23 points. Pretty big movement here. Airbus, Coca-Cola this morning. Coca-Cola European, I guess they report separately. And then a bunch of others pre-market. Applied Materials after the close, and then we had a bunch of central bank speakers today, and then we still have these Fed speakers coming out later today. Fed's Mester came out, Fed's Bullard, Fed's Cook. All these guys are likely to comment about PPI and what the market and the market's likely to respond to that. So that's where we stand. We also got housing starts. Let me refresh this. We also got housing starts and jobless claims. Jobless claims came in at 189.5, a little bit lower. Actually 194, a little bit lower than the 200K expected. But overall, just relatively bearish numbers this morning. Looking at the S&P and its current condition, trending down, multi-distribution profile there seems to be resting at the low. The overnight point of control has shifted to the low of the range. It was way up higher. We have 62 points of range, so expecting this morning to have quite a bit of activity. We'll talk about what we're looking for here in a minute. My mind is everywhere this morning. But overall, here's the S&P on a TPO basis. Just as expected yesterday, really a consolidating day, very choppy, very little to say about yesterday other than it did exactly what was expected, which is to chop somewhere in the middle in about a 20 to 30 point range. We ended up running up at the end of the day. So look at the S&P here. You could see that throughout most of the session, it was basically inside of the IB. We took out the IB by 2 ticks and fell back in. Just not much to do there. And then we finally broke higher, and then we ran up into the close with a fairly weak low, a weak high. The expectation overnight it's likely to keep running, and it did. And then we came in this morning with the PPI number dropping off here, and we have our point of control at the low end of the range. Pretty good separation between VWAP, mid, and the point of control where current action is. The market's out of balance, and the expectation is a pretty active open this morning. So we're going to look to see if the market becomes responsive this morning back towards the 41.25 to 41.30 area right in here. Does it become responsive this way, or does it pull back and then continue down? At that point, we're looking for it to break the 4100 and start shifting lower. So let's look at the intraday chart for that. So here's where we are. We've been basically flagging here sideways. If you recall from yesterday, I talked about this and then it finally broke that. And so now we've got this kind of trend up that is breaking to the downside. We're falling back into the initial trend channel from the high. And so there's quite a bit of room, in my opinion, to the downside. This thing could finally see that 40.50 again, potentially. It's quite a ways from here. It's about 60 points, but that's well within the range, the daily range statistic for the S&P. So this morning, very important to watch the open. This is not an open where you want to go for a walk. This is an open where you want to watch. You want to see whether it makes its way back towards this 25.30 area. And if we see resistance, then we're looking for a short failure to continue. So we're looking for it to push in, consolidate, make another attempt, look for weakness on that second attempt, and then look for a short back to the open, and then to the other side. And in this case, we're looking for it to break the 4100. So that's the key target this morning, is for it to, the key plan for this morning is responsive buying higher that gets resisted. The expectation is buyers are likely to fail to continue to push prices higher. Given this news, this is key fundamental news here, and the expectation is for lower. So it's either going to pull back when we get on a short, which would be ideal. That way we can identify and keep risk lower and get more runway for our short position, or it's going to open, wiggle a little bit, and then sellers will come in and hit the bid and send it off. Anywhere below 4100, I'm going to be looking to get short. Now, if you remember, there's a band here like this, right here, right? And so if it gets below here, it's sell, sell, sell. We'd love to catch it above and see it through the 4100, use the 4100 as protection for a short, but it may not do that. The key target being 40.50 down here, 40.50, okay, if it breaks. If it doesn't break, the secondary scenario is to test down, clear out any late shorts and weak longs, and then start pushing. And if we see it push lower, get back into the prior day's range, meaning getting back above that 41.12 area or so from yesterday, 41.13 really. If it gets back in there and then starts to get weak on the pushes down, then we're looking for a long into 25 and 30. And if 25 and 30 get taken, what are we going to look for? What are we going to look for here? If the 25 and 30 get taken out, it sets up a really big long trade. What would be the target in that situation? What is our classic target on the long in this scenario where we're opening just at or below the prior day's range? So we're going to be looking for a gap to settle setup here. So if it pushes through this 25-30 area and then that becomes a base, you have a lot of room to get long. Just get long somewhere, and then you're back to the SOC, which again, SOC is 4140 right in here, back at the SOC, so that becomes a key target. And then the next key target is going to be the prior settlement of 4158.75. The market resumes its auction. Not very likely, but if it does happen, it's likely to squeeze a ton of people, and that would be the secondary scenario back above. So we're going to check to see what is the quality of the move lower. What I'm talking, you're probably thinking, how do you measure quality in a futures contract? And we do that by looking at rotations. Is it easily rotating lower? In other words, when we look at our rotations indicator here, let me clear this screen. When we look at our rotations indicator, okay, when we look at our rotations, is it easily rotating up or down? Is it easily moving higher, then has a hard time pulling back, easily moving higher? So our impulses to the buy side with weak pullbacks, or our impulses to the downside with weak pushes up, that's kind of an indication of which side has the strength or the power. So that's what I'll be looking for into that 25-30 area in either direction. Okay, so that's the key. Let's look at the relative delta to get some. Remember yesterday we talked about this trader bite right here. Yesterday we were completely sideways. So this is the trader bite. Yesterday we're completely sideways, and I talked about, hey, this thing is having a hard time staying below zero. It's positive across the board on the delta, even though we were opening on top of the full session VWAP, full session mid, and the overnight point of control, which tells us that we're in complete balance yesterday. I looked at the relative delta and I said these words. I said, gun to my head, if it were to break, if I had the gun to my head and I had to take a trade, it would be long. And you saw what happened there on the close. It kind of builds, it took it forever. It built up over the entire day, but the delta really provides some insight as to what the participants are doing. And you could see here that despite the fact that the number came in right here, okay, you had very strong participation by the very large lots here, in the 100 lots or more, but they bought those back, and the very large lots went right back to where they were before the number. What's holding this down is mainly small lots and large lots, very large lots holding steady. Unusual for that to happen. I would expect them to stay negative here. And what that's telling me is if these things start to balance back up, the price action will very quickly follow. Okay, so the very large lots holding steady, large lots buying them back up. Large lots started right here, and they're almost back to where they were, right? And then the small lots, these guys, who also started right up here, are much weaker. These guys are likely to get squeezed on the open. So on the open, we're looking for it to be responsive to the upside. We're looking for it to push back up towards that 25-30 early on. I'm going to cut it off here. There's not much for me to say about NQ and Y and CL. NQ, same scenario, relatively almost exactly in the same boat as the S&P. Crude, a different animal. Crude is breaching, even though it's been one-time framing down since earlier this week. It's breaching to the upside, and it's very likely to repair the single prints above, and it's very likely to push back to 80 today. Remember, crude has rolled today. There's a 24-cent premium The front month starting today should be April, CLJ3, instead of the March contract. So crude is expected to just continue to push higher today. So I would watch the short side on crude. Please remember to hit the like button and to subscribe to the channel. There's a link that I'll post into the chat here where you can just click on it and it will take you to the subscription screen. Remember, the subscription is free. You're only subscribing to the YouTube channel so you can get notified when the Trader Bite starts. And I would appreciate your support. So hit the like button, and hopefully you gain something today. Keep a close eye on the open today. I'll let you go now so you can get ready. Take care.